Right. First of all, we need POS plus. Okay, that is plus. That BS is group of structure plus. After group of structure, we now need something called Fibonacci. Fibonacci plus there is other block equals to my entry. So this is my first entry. So my second entry now is first thing I'll call it liquidity. First thing there must be liquidity. Liquidity plus BOS, that is plus Fibonacci plus OB is equals to entry. So I will explain this thing one by one. So let me explain the first one. This first, let me write it number one so you understand what I'm going to say. This is number two. So let me explain number one. This is what I'm going to say. So first of all, you see something like this. Something like this. So this is our previous eye, you know. So this is our previous eye. Hello?
Yeah, yes.
So this previous
Yeah,
eye.
yeah.
So the reason what the first thing is we're looking for what POS here. That is break of structure. So the market must break this previous high. That is meaning of break of structure. So if the market break this previous high, this is our first confirmation. That is the break of structure. That otherwise that I will write BOS in that high. If you check my chart, you used to write that in there. That is my first confirmation. The second confirmation now is not the Fibonacci. This Fibonacci, it means I used to enter trade at the 0.61.8 Fibonacci retracement. You know, at example now, if you draw your Fibonacci from this level to that high that the market buy and reach, you understand? So you have to mark that 61.8 level. That is 61.8 level. That's where I'm going to look for my entry. So we have gotten these two now. These two is ready set now. So the last one is our OB. OB is our order block. So it means that after you have getting your POS, the next thing is the Fibonacci. And this Fibonacci, you are going to just mark that area, just to mark from 61.8 level to that 0.5 level, that 0.5 something level, that two side. So the next thing is that you are going to look for the other block in that area, and the other block must be the one responsible for the breakout of this BOS. So that other block, it will not be your entry. You understand? That way you just put your buy limit. You just set your buy limit and put your stop loss, targeting the previous high, or you can add even to like set breaking from that. So this one just to continue the trend. You understand? So this one is just this is one of my entry model. This is the first entry model I used to use, and it's very okay. It used to work 70 to 80%. It's 70 to 80% accurate. That is number one. So like if someone I'm trying to say, the reason why I say it's more accurate is that, let me ask you one question. Let me ask one question. The reason why there's more money in Forex is because more people is losing than more people is winning. That is the first thing, you know. Hello? Can you hear me? Can you hear me? Can you hear me?
I can hear you.
The reason why there is more money in Forex is because there is more loser than the winner. So now what I'm trying to say is that the reason why I say that this second entry model is more accurate than the first is because you are trading against the losers. That what the losers is trading, you are trading against them. So it means that you always be on the right side every time, but it's not 100% because there's no any strategy that's 100% accurate. There's no any strategy, but it's just that you are more accurate than this first this thing. So let me explain how it works. The first thing is what is called liquidity. The reason why of this liquidity is because if, for example, now people is buying, more people is buying, it means that the market has to sell so that the people that bought will have to lose money. So the reason why it's like that is because there is something called liquidity, and this liquidity is what likes to trap traders. So I'll explain. I just wish you open your eyes and see what I'm trying to say. The bigger the liquidity, the more the market will go in your direction. So what I'm trying to say is that liquidity is a sign of money. Like example now, the market deceive people that is going to sell. And what happened? Many people enter sell. The next thing, market starts to buy. What I'm trying to say is that people that many of them will lose money. So the few people that now bought, they will now make money. So that is the work of liquidity. So if you can learn liquidity very well, you see that you make more money because you are trading against people that is losing. So let me explain. So this is how liquidity works. So example now, the market is selling. You see that the market move up, and the next thing to break this level. Assuming the market is selling like this now, but now this thing is downtrend, because that's why lower high. Example, if you check the bigger time frame, you see that there's one level here that many people is waiting for the market to come. Like example, one support zone or support area that people have been waiting for this sell to reach, and they will not be buying. You understand? What will happen is that once market reaches level, these very many people will enter that they are buying. What happened? The market is not buying, because if the market buy from here and everybody make money, what will happen is liquidity that push the market. So if everybody buy from there, the market can never go. It's from people losses that the money is coming from. So what do you think will happen? The market will just like move up small and allow people to enter more position. The next thing, you see that the market will just wind down like this, clear everybody's stop loss. This is the time that you call it what liquidity. This liquidity means it's just to take everybody and wind their stop losses. Then the next thing to now move up again. When you see this thing and see give us break of structure, just know that liquidity have happened already. Once you see this liquidity, just know that it's going to go here. It can come to this level, it can come to this level. So the thing that you have to wait for the other block that is very simple. So after this now really happen here, this liquidity here, before you now come and start this journey I started, this thing I explained here. So you see that after this liquidity, that's when you see this remaining setup. So this liquidity here now, that would make this remaining setup to be more accurate. You understand? So anytime you see liquidity and the thing follow up with this remaining setup, just know that if you risk more, you will make more money. I'm telling you the truth. I've seen that today. Let me go back. Let me give you a chart analysis. If we check last week, you will see something here. I want to show you what happened, because I know that you are there, you watch everything. So let's go back to our group. This is our group here. So I want to show you the power of liquidity. You see that if you can master this liquidity without you even analyzing with laptop, you will make more money. So I want to explain this liquidity very well. So that's what I'll be using. Where is this chart? When I say news by 7 and news by 3, let me just show you the chart here. Tell you this one is not better. So let me explain here. Are you still see my charts?
Yeah.
Okay. So let me explain what I'm trying to say. If you check, you see that this market, normal. Let me just start from here. You see that this level here, this market creates low here. After it created this low, you see that everybody is expecting buy, because normally, even me, I was expecting buy. It's because of I'm not greedy. That's the reason why I ended up with profit that day. As long as I'm greedy, I will eat loss that day. I was not greedy. So everybody's expecting buy, looking like, okay, this is where the market will start to buy from. But what happened when you bought from here? Market to buy, it will have to eat people's stop loss. So what I'm trying to say is that if many people buy, and like out of 100 people, 80% buy the market and 20% sell the market will sell. It's the loss that is giving you profit now, like people's loss. You see this thing like this, you see that the way you are trading will change, because if you check, you see that the market is buying. It means that many people entered buy here. Many. If you you see that the news will wipe it down. After I clear people's stop loss, if you can remember, I said that this is liquidity after that news. The reason why I call it liquidity is because this market have trapped buyers here, and look what happened. After it has trapped the buyers, then the thing wiped down. And I say that for this market to confirm that it will buy, don't forget, this one is just what the first step. That is liquidity, because this is my second entry model. First thing is what liquidity, and these are liquidity. The second thing now is what break of structure. That is BOS. So after this liquidity, where's our BOS? These are break of structure here. Why? Because these are previous high, and the market what? You see what I mean? So I'll just label it BOS. You see. Then the next thing now. What is the next thing? Fibonacci. These are next things. So, and I say that in this Fibonacci, we are going to measure where the market starts to buy and where the market starts to reverse. So let me measure the Fibonacci from here. This is where the market starts to reverse. So I say that in this Fibonacci, our entry is in two places. Is in the middle of 61.8 and in the middle of 0.5. That is in the middle of this one, 0.61.8, and the middle of 0.5. But look what happened next. Our other block, that is our entry zone, because we are marking the Fibonacci. Our other block will be in that area of that our Fibonacci. So that the reason why we are using Fibonacci is because that 61.8 and 0.5 level is the highest retracement the market wants to continue the trend. That is the highest retracement the market can give you. So if the market break that retracement level, just know that the market is no more buying again. So that is the reason why I use that Fibonacci here. So let me mark the other block in that zone of that this is the other block here. And that 61.8 level, no, it's this one, because the other block is the last bearish candle before the breakout. That is it. And this is the last bearish candle before this breakout, So let's check, maybe we are correct. So this other block now, if we draw it well, did we get the entry? You see, it's sniper entry. So you see how simple it is. It's not too hard, it's simple. You have seen that thing gave us sniper entry. I can advise you that don't rush this market. For you to not rush it, just set your pending orders, your stop loss, something like that, and I think that your TP it will either be the previous high. You understand that Fibonacci where you start that Fibonacci, or you can just extend it to the, like, if you can check left and see another high there. So this, if you see this type of chart, this trade now, only this one trade now, you are risking. Let me set this stop loss. You are risking like 10 pips to get 55 pips. That is almost 1 to 5, and 1 to 5 in funded accounts. That means you have made 5% once, and say that you need only 8% to pass phase 1. You see, only 2 trade you pass. You see, I'm just giving you the secret. But the thing that is killing people is that they cannot hold the trade. You know that for you to hold this type of trade like that, if you check how many candles, for you to hold it there, that's what you do. Because you'll be a profit. You say, this will not come out my stop loss again. So there's another thing called trade management. So that trade management is another topic on its own. So that one is different from strategy. That's another topic. That trade management is just to teach you what to do when your trade is going well, or when your trade is going your direction. Example now, this market move up to here. You cannot just leave this trade like this, First thing is just what? Adjust your stop loss to entry. So just know that you are already in break-even. That is the first thing. So for you to now look for what to do next now is that this previous high here, anytime the market break this previous high, then you now shift your stop loss again. This is the entry level for the this is the strategy for this second entry level. So let me explain this first entry model now. You see the difference between these two. Let me explain this first entry model. First thing is BS, the second thing is Fibonacci, and the third thing is other block. So let me just, first thing is BOS. This thing is called what? BOS. The second thing is Fibonacci, like checking the 61.8 level, and the example this is the 61.8 level. Why the third thing is not the other block? I think this is the other block here. Then you entry will not be that at the other block. Anytime the market comes down there, then you're not free to do. That is the entry window. These are our let me just mark this place as support, something like this, just to assuming these are support. And if you check, we see that the market has been buying. So now let me answer this question. These are our previous high, because if you check, you see that this is the high and this is the low. No, this one is equal to like something like W. So it means that until the market break this high, before we know that the market is no more selling again. These are our high here. So it means that once the market break this level, just know that the market will continue to buy. So the next thing now is that we are going to mark this level. So what does it do is that I used to mark here. Assuming the market is still at this level here, I'll just call this place liquidity. Do you know why? I used to call it liquidity first, because until the market break out, before I will not call it, after the market have break out, I will not change it to what? I will not change it to POA. What I should do, I'll put it as liquidity, because the market can just come here and create liquidity and drop. So that's why I call it liquidity first. Until the market give us a clear breakout structure, I will not call it BOS. After the BOS, the next thing now, let's check our Fibonacci. So okay, this is it. So this, if we draw a Fibonacci from here, where is the eye? The eye is big. Let's look at it. Okay, this is the eye. So we're looking at two levels, 61.8 level and 0.5 level. So these are our two level here. These two levels. So now this is the other block responsible for this breakout, because we have found our levels here. So this BOS here. Our other block is this last bearish candle. So in fact our last bearish candle here, you see, and extend it. I think that you can be using your pending orders. Just put your pending orders at the eye of that other block. Yeah, put your stop loss, something like that. Just put numbers, don't go and put a tight stop loss over. I don't send anybody. So the next thing, look what happened next. So assuming you set your TP at this high here, that's when trade management will come in. Because if you manage this trade well, you will still come up with profit. It's just that assuming you don't manage this trade, just hit CP, you to hit your stop loss back. So that trade management is another topic of itself. So you see that this two entry model, they are very good, but just that liquidity phase, that one has more power than this one. So that is different. The two strategies are very good. I started with the first one, and I used to use a past profit. When I start with the second one, I can pass profit in this one phase 2 in a single week. There's difference in that. There's one is powerful than one. So the one that has liquidity is more powerful than the first one, but the two is okay. So this two strategy has MCI 60 to 80% win rate. So it means that even if you trade like 3 times in a week or 2 times in a week, you still come out with profits. That's what I'm trying to say. I will be stopping here. Try and practice this thing with demo account very, very well. So the next class, I'm going to use a backtesting model. It will be like real life trading, you understand?